We made it. Finally, we're talking about the ultimate stage of rounds of financing, Series B and plus. So B, C, D, E, however long it's going to take you before you decide to go either public or get acquired. Let's talk about the theme. It's all about the market takeover and planning towards the exit strategy. I know for a lot of you, at that point, you already have teams basically helping you strategize around this. But I still want to go through our standard kind of like breakdown of the questions you're going to have to prepare to answer, some of the themes you should plan to discuss, and some of the materials to prepare, because at least right now, entering maybe some of the more senior stages of your company's maturity, you can start planning for some of these themes down the line. Since the theme is continuous kind of like growth and continuous takeover of the marketplace, the first thing you need to be ready to answer is, okay, how have you been doing so far and how have you won the market share? And what are your plans to continue to grow this? Are you releasing new products? Are you translating your product into different languages if that's applicable? Are you going after new categories? Maybe you were targeting, say, middle class folks in certain countries. Now you want to target higher earning individuals, so maybe less income potential individuals. Like, there can be different ways by which you can break down those cohorts of potential revenue expansion, geographically, product features, type of products. There are a lot of interesting things you can kind of like explore there. And you want to show that, okay, we've been successful. At this point, you're probably running, multi-million-dollar company. So how are you taking that company to the next level? What are your operational efficiencies and how you continue to optimize them as you scale? Meaning, are you going to need, again, as much money as you raised last time around to do this expansion? Or now that you've done this before, you have the right team, you have maybe the factories, you have the technology, you have the experience to ensure that every subsequent dollar that your company earns is actually, coming at a lesser cost. This is one of those important things to show at this level, because one of those other things about you positioning your company for the acquisition is profitability. You can no longer afford, in majority of the cases, there are exclusions, to be a Series B company and not be either seriously working towards cash profitability where you're self-sustainable and you only need this money to really kind of like go and expand at a rapid pace, or you should be already cash profitable. If you're not a profitable company, you're raising funds, that might show the fact that you're not operationally efficient and you're not disciplined enough to build an organization that can scale without you constantly throwing money in the fire, kind of like to keep that whole thing going. So you have to show them how to be able to scale. And again, to my earlier point, how can you make more with less going forward? To demonstrate it in the numbers, because you no longer kind of like back in Series A, not in Series A, like pre-seed, seed, where you can just guesstimate the numbers. Now you have to show the numbers. And this is where you would support that case by showing deeper analysis of the gross margins. You're going to show the net retention. You're going to show how you understand your customer segmentation, how successful you're with it. Are there certain customer segments where you make more money? So this is where you're going to allocate the funds, versus some of the other customer segments where maybe you realize like, hey, they're not very profitable. We're actually going to retire this complete segment of our business, right? Maybe you're going to shut down certain product or certain service, and we're going to refocus on all of these more profitable areas. So showing data-driven decision making is going to be crucial at this stage. And this is also will slowly spill into the conversation about, any kind of like threats and incumbents. I already spoke at Series A, where you're going to start seeing at that point, when you start breaking into millions of dollars in revenue, that they're going to be ankle biters if you're new to the market, or they're going to be existing incumbent companies in that industry that will try to go after you and protect themselves against you, because they're going to think of you as more of an ankle biter if you are kind of like at the lower stage in your revenue. So how are you combating that? How are you now prepared to not only acquire the market share, but also defend it and ensure that you can continuously make money at the same pace without worrying about some other hot upshot created by another creator rooming in and essentially saying like, okay, we're going to now take over that market share that they've been developing, right? So very important to show. And in some cases, it can be actually one of those reasons why you're doing Series B, because you might be interested in not only expanding it organically, right, or through product features and new product releases, but inorganically through M&A acquisition. There might be a smaller company out there that's been kind of like following your steps. They've been doing something interesting, but they've addressed a different side of the market, right? If you're maybe over here in certain cohorts or certain types of products, they're over here, but the products or maybe the market, they're very similar or adjacent. So there can be an interesting story to tell, to say, hey, in the Series B, we're going to raise 100 million because we're going to spend 50 million of it to go acquire that company. And we're going to add their revenue to our revenue. It's going to become a bigger company. It's going to be a lot more interesting opportunities for us to grow. So there's some interesting stories to tell there. And from then on out, again, as always, you have to prepare to continuously talk about the leadership team, how you're expanding the leadership team, how are you actually now creating the succession planning, because you're becoming mature enough and maybe you've so far been the CEO of the company, but do you have the skills to take it to the next level? Maybe it's a much bigger organization. Maybe you don't have as much of an interest right now in running the company, or maybe you just realize like, hey, if we're going to combine these companies, maybe there's a CEO out there who we can go and hire who is familiar with the industry, and that CEO has a very reputable track record of taking these kind of companies through IPO or through a major acquisition, right? So there's going to be some interesting conversations about the leadership team, any potential gaps that you have in it, and how you can continuously kind of grow in that area as well. And again, that's where it comes back. I already mentioned like translations and things like this to also the global growth, because again, we speak English speaking channel. A lot of it is English speaking centric, but are there opportunities for the global growth, right? Because a lot of the companies that develop here, for them to really take it to the next level, become this like multi-billion-dollar company, you cannot afford to ignore the rest of the world, whether it is Europe and English speaking countries in Asia, in Pacific, or you just again realizing that, hey, there's ways for me to deliver this product internationally in Latin America, in Spanish-speaking countries, Portuguese-speaking countries, right? Maybe Dutch, German-speaking countries. So a lot of interesting opportunities, and talking through them, showing the metrics, showing the examples of it, talking about what it's going to take you to get there is one of those conversations you can have if, say, you're planning to grow, again, organically, but not through M&A. Or the cool thing can be, you might be acquiring a company internationally that actually has that expertise, understands that market, say, someone in Brazil, and Brazil is a huge market for you potentially. And they're already Portuguese speaking, their product is in Portuguese, so they can help you kind of like translate it, make sure it applies to the market. They have the people and the relationships in the market to help you kind of like expand all your products through this acquisition into that market, right? And so again, a lot of interesting narratives that you can build, all depending on what kind of strategy you're pursuing at that stage. And as I've mentioned again earlier, kind of like it's all about the cookie crumbs, right? What is your path to profitability if you're not profitable yet? I already mentioned, I'm not going to spend more time on that point. You have to be planning for it if you're not already. And then you start talking towards the exit. Okay, is the exit plan IPO? So then there's a set of expenses. IPO is an expensive process. You have to hire the right people. You have to hire the auditors. You have to make sure you go through all the checks and balances. Is that the path and where you're going to invest part of the money from Series B? Or do we have some other big incumbent corporation, maybe some private equity fund out there, maybe some other company that might be interested, and we've been talking to them? Because at this point, we probably have been mature enough where you've got some inquiries, you have some relationships, you spoke to some people. Never be surprised when you hear about companies talking to each other, because I promise you, you're not doing your job right if you're not constantly at this point in time, like around Series A already, you need to be talking to other companies or funds and talking about potential, like, hey, what it would take if, what would it take for us, whether it's revenue, whether it's retention, whether it's a certain types of products, to become an interesting acquisition target for you. What are you investing in? And vice versa, you talking to other companies and saying like, hey, if I would go to acquire you, are you interested? Are you in the market, right? So it's this constant kind of like this courtship that has to happen, just so that when the moment comes, you're ready and you know who is interested, who is not interested, and what it will take you to become an interesting target to be acquired, or what it would take you to acquire someone else in the marketplace. And then from then on out, kind of like the last 3 points, a lot more about, okay, we're talking about the risks, we're talking about how some of the things that can go wrong, which is a very standard conversation. There's a nice planning framework where you basically, once you come up with a plan like this, you ask yourself, how will it fail, right? And you essentially then go through a checklist and saying like, oh, maybe my CEO will leave, or maybe we'll completely fail translating the product, or we're gonna fail to purchase all the right materials to produce this new product, right? And just planning and mitigating all of those risks is one of those important factors that you need to do, because right now, profitability and predictability are those huge pillars for the company at the Series B level. And then talking a little bit about where the industry is going, and we'll talk in a second about the market research, but essentially again, showing that you're keeping your hand on the pulse of the industry, understanding where it's heading and kind of like what's going to happen in the industry and how you'll take advantage of it. AI, great example. everyone's being asked right now, how are you thinking about applying AI to this particular function, to this particular product, right? In the future, it might be something else. So just talking to them about and showing, I understand where this is going and here's how we're going to plan towards it. And then again, talking about all of this, basically the reason why you're answering all these questions, you're showing your success, but also showing that you understand where you need to go and how you will get there using the capital that you're raising right now. So it's kind of like all should be intertwined through the responses to this question and not necessarily just separate question on its own, like how you're planning to raise funds. Obviously prepare some materials for that, but it should be intertwined through the answers to all of these questions. And as you noticed, a lot of these themes that you're addressing, you've been already kind of addressing in the past chapters. It just the level of sophistication of your responses and the thought process around them will be more informed by the actions that you've taken in the market so far. So this is one of those kind of like important things to learn, and the reason why I wanted to make it as a series, because once you've seen all of these steps and potential questions and things you need to think through, independently where you are on that timeline, you can be a lot earlier in the process of just starting the company. You might be already at the point where you're considering raising serious funding for your company. You can start thinking and planning about the narratives, thinking about the direction of travel. This is just one of those things you have to always be thinking about as a founder. And you as a creator, you already have some opinions, some thoughts on the industry, on the niche that you're targeting because of the fact that you've been making content in it. So how do you intertwine it within this idea, within all these narratives that you have to follow? And the more consistent you will be through all these stages, the more impressive you will look in front of those more mature investors, because you will be able to demonstrate, yes, maybe the common misconception is that just because I'm a creator, I'm not a good business leader. But when you go through all of these steps, you can demonstrate that, no, I've been planning and masterminding it all along back then. And now we're ready to execute at this way more mature level of Series B+. But that, in terms of what you need to actually plan to discuss. So we spoke about some of the key questions you'll be asked, but you should definitely plan to discuss just in general, how you've been doing so far, all your key, achievements and changes that you've kind of like made to the organization, how much market you taken over. There's a lot of like interesting things you can go showcase in terms of just patting yourself a little bit on the back and showing like, hey, we managed to execute pretty well. From then on out, talking about the business model and really showing like, okay, we really understand how to scale. We've been experimenting with things. We've launched products. We did this and the third and the A/B test of certain types of features. Just being prepared to show that we understand what we're doing at this point, right? Like, as I said, the maturity matters here. It's no longer, hey, we're just experimenting. We're raising a little bit of money to throw a few things on the wall. No. It's a serious business. We understand what we're doing. We have had our hypotheses. Some of them were successful. Some of them we failed on. But this is why it matters, because you can demonstrate, again, the fact that you understand how to go through the decision-making process at this level. Talking about the operations, I already spent enough time on this, just showing that you can continue to scale. You understand how to improve the business, how to make it profitable. Speaking of that, thinking about the financials, showing, okay, here's how we've done in the past, showing how like our product economics are improving. Our cash flow is improving. We're making more money. Maybe you're profitable at this point, but again, showing the level of sophistication, understanding your financials with your finance team, because at this point you will have a finance team managing a lot of these things, will demonstrate again, we're taking this seriously. Thinking about the future, right? And again, I mentioned before, that's one of those key questions that you're going to be asked. So thinking about how you're going to demonstrate through this conversation, this idea of future product development, features development, market acquisition, and demonstrating, okay, how you're going to leverage things that you've learned and the capital that you're raising to be that successful company in Series B stage where you take advantage of those growth opportunities. Showing and demonstrating that you have the organization to support this. Coming back again, I don't have to repeat too many other items about the leadership team, but just showing that you have the people in place so you understand the gaps where you might not have people in place right now and how you're going to fill them. And then from the competitive perspective, again, the analysis and level of sophistication of information you need to have here is a lot higher, because at this point you're probably, keeping your eye out on some of these competitors. You will probably at this point have at least one person who runs corporate intelligence, right? So they're kind of like running the analysis. They're talking to people, talking to customers, talking to prospects, maybe talking to some people who they know at those companies, and gathering information about the competitors out there. And then the exit strategy itself. Again, and I mentioned it at the very beginning, one of those best success stories is when I see founders decide early on, Are we building this to make it like a big IPO thing? Or are we building this to essentially go and find someone to sell the company to? And so again, showing that at this point, there've been a lot of, capital acquired. There've been a lot of investors. They'll all be interested in seeing how am I making my money back. So telling them a little bit of that story and helping them understand how you're going to get them there is highly important. And then from the material perspective, again, right? Financials, all the KPIs, all the metrics, just super uber crucial to have this buttoned up, because this is going to be the critical point that will help people evaluate if I'm going to give you an extra $100-200 million, how are you going to use them and will you be efficient at using them? And this is where showing the operational metrics, showing that you understand your customers, you understand the product, you understand the unit economics, and kind of like how you're going to take advantage of those financial things. Financial investment is very much important. And then the market research, you at this point probably contracted, a bunch of research, you probably hired some teams to do some work, you've done your own customer research, right? So you have a ton of data and information about just understanding where the market is going, where you are within that market, and how you're going to take advantage of that. All of this combined and stored in data rooms. Again, we're not going to go too deep today, but I've mentioned in the past, if at the very beginning it may be like a Dropbox or Google Drive that you share, at this point you're going to be using dedicated SaaS application that provides you with a data room, and you essentially have this highly secure set of data that you can share with the potential investors so they can audit all of their financials, audit some of the documentation just to understand that your business is real. There have been plenty of fraud happening in the past, so this is why it's very much matters. Those sophisticated investors who are dealing at the Series B and beyond, they will need to know a lot of information. And this is where it also comes back to the customer information. They would want to see examples of the customer contracts, example of the data, of some of the size of the deals, what you sold. They might even want to call up some of those customers. So that's one of those things that's sometimes being discussed of like, hey, can I actually pick up the phone, call some of your larger customers? Or even without asking you, they'll see some of the logos and they'll be like, hey, I know Bill who works at so-and-so company. I'm just going to call them up and say, like, hey, are you using this company? Say software, right? How has it been? What do you think about it? And they're going to learn a lot through those conversations. Key person risk is a huge thing at this point because you probably have some key designers for the product or software engineers or some other key leaders. So again, talking about those employees, talking about why they're going to stick around, what your succession planning for those like is one of those important things that you can talk about. And again, just talking about the effectiveness of your future growth, how you take advantage of all those things that you've done and learned before as you apply this money to kind of like continue to grow this company. So just a bit of information. But the good news at this point, if you've been managing this company, if you've been kind of like following through the path and you've seen some of those questions and themes being asked and the kind of things you talk about, you already recognize that 75% of the items that we just discussed today is something that has been asked before in some other different way. So the good news for anything beyond Series B, it becomes very repeatable in the sense that like it's same nature of questions. And okay, if you're raising Series C, you're going to be asked again, okay, how have you been successful with Series B? What are you thinking about? Where are you expanding? What kind of new products you're doing? Like all sorts of things that help them understand the direction of travel. If you could do Series D, same thing. Series E, same thing. So it all becomes very repeatable, which is good news because at this point you really know your market, you really understand your company, you know your gaps, and you continue to take advantage of the funding that you're raising to hopefully show that positive trend and showing that you become more profitable, more scalable, and you become more interesting acquisition target or more interesting potential IPO. That's about it. So I hope this was useful. I have one more video in the series to take care of, which is essentially talking through some of these metrics and terminology that I've probably peppered here and there, and I haven't spent enough time discussing. But at least right now, if you look back for the past few weeks, you have hopefully very useful guide on how to go and think through in raising funds for your company from the pre-seed stage all the way to right now, Series B plus. So let me know in the comment section below if I missed anything, if you have other additional questions you would want me to include in the next video. Otherwise, I'll see you next Saturday. Peace.